within that oil move, we had structure stay very firm. So if you pick a 6-month calendar spread, for example, March, September, that spread was $1 contango last summer when oil was on its lows, and it has since rallied now to a high of $3.50 backwardated. And in this pullback in oil, it has pulled back to about $2.60. The trend is still, the uptrend is still intact in the spreads. The backwardation in the market is still very much in effect, where front month prices are higher than back month prices. That's part of the dynamic that causes speculators to run into the market when they can roll with positive carry. And like I said, the price has come roaring back. So it's showing that oil is responding to the synchronized global growth story that's taking place underneath the surface. Structures remain firm, and I think most importantly, the narrative is intact, okay? I've been riding the narrative via the lens of OPEC and Saudi Arabia. Since oil was on its lows, Khalid al-Falih, Saudi Arabia's oil energy minister, came out and said that he was going to encourage production cuts last summer across OPEC. The entire energy world decided to fade that premise and say that they didn't think that OPEC would be able to comply with production cuts on the order that al-Falih was looking for them. It turns out that he went on a tour last summer. He met with producers, he met with hedge funds, he met with mutual funds, and he told them about his plan to tighten up the oil market, and that worked. So now at this level, with the Saudi Aramco IPO on the 2018 calendar, I think it would be foolish to take our eyes off of that narrative, right? That is Mohammed bin Salman's $2 trillion valuation state-owned oil company, of which they are going to IPO 5%, so $100 billion. They're currently deciding where they're going to IPO it, and it is in the works, but it's supposed to take place at the end of this year. Now that the oil market's risen from the 40s into the 60s, Khalid al-Falih, who I have a poster of in my office wall because he is the oil narrative, he is looking to build consensus among the producers whereby they will continue their production cuts in a more formal arrangement for a longer period of time. He said if necessary, he will tighten the market even further. So when I look at who has been controlling the oil market, that narrative has really worked for you if you followed it from the 40s into the 60s. So I like buying oil on this pullback because structure has remained firm, the narrative has remained firm, and price has really remained firm, even through the big de-risking that we've seen in equities. That's important to me.